Hello, everybody, and welcome as always to TradeGate Hub's morning market update. Of course, I am your host, Eliman Dambell, and thank you for taking the time to join the session here this Monday morning. Of course, a lot has happened over the weekend. A lot has happened, of course. On Friday, we saw non-farm payrolls come out slightly lower than expected, but we still saw growth coming from the US. So what we are going to do today, of course, is go through some of the markets in which we're most impacted. Of course, we did preview NFP there on Thursday, so we will see how markets reacted to what we expected, and some of the moves that we anticipated did come to fruition. But guys, before we do so, just please, as always, do me a favor, go through that risk warning in the description of the TradeGate Hub live stream session. Of course, we will be able to begin. Guys, as far as beginning, I think there is no place to begin other than gold. Of course, if you remember last week, we did the analysis, we saw the opportunity, we saw the market somewhat restraining or refraining from breaking out of that resistance of 1917. Remember, we said 1917, isn't that a movie? And generally, we saw a lot of bears in that area. We've been talking about it for the past few weeks. We saw those historical bears at that level, the historical bears at that level. A lot of bears trading at 1917, and we asked ourselves the question, will we see history repeat itself again, saying if we had a weaker than expected number NFP that could potentially cause this? And what we saw was two things. Firstly, yes, we were correct. We were correct. You can see that just looking at our account history. If you recall, we had a pending order which was executed in a take profit of 1816. So that was essentially action. And generally, it's very interesting to see where we left 1860, and you saw the markets went to a low of 1854 before rallying. So we left around $6 on the table. But the reason I wanted to leave that trade was historically we saw the the uncertainty which came below. We saw the uncertainty which came after 1860. 1816 seemed to be a flaw. You saw the bounce that took place. And this is why I always say, guys, for you and for us, it's a case of being realistic, not a case of being overly optimistic or pessimistic. It's simply a case of being realistic. A lot of us would have hoped this continued to the 1800s, early 1800s, but we need to be realistic. We saw the flaw there before. So instead of leaving the trade running, at some point you have to somewhat empty out the register and go out and cash in your chips. And I think that's essentially what we did there. And luckily so, because if we didn't, we saw how the markets reacted the very next day, bouncing back. Some of you would say, okay, why don't you go ahead and take in a trade on the other side instead of just taking profit? Why don't you take a position on the other side? And I think, guys, real traders would know from your own perspective, you don't want to. Absolutely, you could. But for me, how I like to trade, I like to put myself in positions of looking at a opportunity. And the opportunity which I saw, which I believe was most valuable, especially based on the risk reward and whatever else, was that trade there. And you can see being involved in somewhat of a $35 move. I beg your pardon, $35 move there in gold, absolutely huge. In at 1855 out at 1960, huge move, top to bottom. So it's one I'm absolutely happy with. Now it's a case of waiting and seeing if there are further opportunities. Now, as far as moving forward, instead of me just gloating about the trade, and guys, again, it's not about being right or wrong. It's not about the monetary value of the trade or anything of that nature. It's simply a case of being able to look back and say, we did the analysis, we did the work, we saw where the opportunity could be coming from, we saw what could cause it, we looked at all of the indications, and essentially we didn't know. We could have been wrong. The markets could have rallied to 1961. But with our analysis, with the opportunity that we found, this was the best one. And for us to look back as a collective and see that it has come in the way in which we would have envisaged, it's an absolutely beautiful feeling, which I'm sure you would have experienced at some point. But now looking forward, what do we believe will happen with gold? So for me, you can see, of course, that RSI as well. We were talking about 54. It hit that 54 level. So it broke out of 70. And if you remember last time, we were saying historically below 70 is where we saw real sellers take place. So that took place. Markets went to the floor of 54. Now we are seeing some consolidation. I think if there are to be further bears, you're probably going to look below 54. We're currently at 58, so probably below 54. But if we see this continue towards the 60s potentially, we may see some of those bulls trying to take us back to the teens in relation to the 1900s. You may be looking at 1915, 1916 towards that ceiling that we have there. So that possibility is absolutely there, does exist. But for me, I think between it's an interesting one. I think long term as well, if you look at the moving averages, they are positioned. Of course, at the moment, it is the momentum is upwards. It is continuing, but at some stage, you will anticipate that the tides will turn. That there will be a potential crossover on a downwards trajectory, creating the potential for further sell-off. So it's one that I'm going to wait and see, as we saw historically as well. Sometimes even when we had that initial drop, it consolidates for a while, then drops further. That could be what we're seeing now. So for me, this is a wait and see, probably waiting to see what happens below 54 in relation to the RSI. In relation to the economic data today, not much from the US. Of course, we had GDP numbers earlier. We will have GDP numbers annualized coming out of Japan later on. And that's pretty much it as far as today. Of course, again, non-farm payrolls coming in at 559K. It was expected to come in at 650K. So we did see just over around 90K shortage as far as the jobs there. But overall, again, still somewhat positive overall as far as what's happening in the US economy. We are seeing jobs growth. You are seeing, I don't know, there's plans of Trump and the Republicans to come up with some type of a new tax incentive and things of that nature. So it will be interesting. As far as this week, we don't have too much. We have inflation numbers coming out on Wednesday from the US. And that's pretty much it. That's pretty much it this week as far as economic data from the US. As far as other markets, we have quite a few. We have ECB, the rate decision coming out this week. We have, of course, the press conference that follows. And it's going to be an interesting week. So there is quite a lot coming out as far as data this week. And of course, you will have the ability to go on TradeGate Hub and look at the economic calendar and, of course, keep abreast with all of the news that will be announced, just to give you some more guided view. So gold, great one for us last week. One of the main ones we were looking at last week. So great to see it has come in how we would have liked. But moving onwards, Bitcoin, not much else to say. Not much else to say. Again, I said this. When did I say? I said this. Well, it was probably 2 weeks ago. 2 weeks or 3 weeks ago. My condolences to those who bought the dip, quote unquote, as far as Bitcoin. You can see those now are really, really probably starting to regret that decision. Because it's just been an absolute consolidation since then. The markets just look absolutely nasty. Just look at this. It just looks absolutely nasty, especially if you would have purchased potentially at that 34K level. Not 34, I'd say probably a slim majority would have purchased that. I would say realistically, people probably have entered more around, I would say 35, even 36, where we are now, when they started to see the momentum truly turn. Then you would have had those, okay, taking and climbing and trying to raise the price. The smart traders, the ones who would have anticipated that initial bounce, would have left. They would have already left around 40. As soon as it got to around 39, 40K, they would have left that trade. But those more long-term bulls who remained are now finding themselves in a position of pretty much just breaking even and seeing the markets pretty much going nowhere. And again, it was obvious consolidation. After such a huge decline, there was always going to be this consolidation, as we said a few weeks ago. Now, the main question is, when will this consolidation end, or what will cause the consolidation to end? Of course, we saw, I don't know, a lot more tweets from your man Elon Musk over the weekend. Unfortunately, this time it didn't really have too much impact on Bitcoin. To be honest, he wasn't talking as much. He was talking about Tesla and a few other things. He didn't spend too much time talking about Bitcoin, talking about, of course, the new Model S, and a few other things of that nature, a few memes here and there, but no, not too much directly talking about the cryptocurrency side of things. But again, guys, when you are waiting, when you're looking at the account, the Twitter account of Elon Musk, to potentially say one thing or another to create a trading, that's when you know things are tough. That's when you know things are tough. And of course, that's when you know things are tough, guys. That's when you know things are really, really tough, and you've probably made a very bad decision. So thankfully, it's one I'm not involved with. But guys, on a personal note, actually, no, these session trading isn't personal. So is business. On looking at this realistically, from my point of view, rather, I should say, I don't believe the selling is done. I do not believe that the selling is done. You can see there, of course, we had that floor of 40. It's currently at 39. If it goes towards, let's say, 37, and it really breaks out of this this support level, I do believe you could see this fall further. I really think this is probably heading towards around 28, 29K. I believe that could be the real floor. I believe that could be a floor, maybe not the real floor, but a floor. You can see, you see a lot of times where the markets have ended up there. I do believe it is looking to make its way back there and make its way back home. And of course, we've seen the bulls which have lived there. So maybe that would be a more realistic place for those who would, I don't know, quote unquote, want to buy the dip, ignoring this consolidation and seeing that the markets reach their true destination. And of course, at that true destination, we've seen the bulls. We've absolutely seen the bulls which have lived there. So the question is, if it is able to get there, which I believe it may. I really, really believe it may. If it does continue in that direction, reaching that floor here as a daily time frame, that floor here in a daily of 27, I do believe you will see, of course, the markets at that point will be extremely oversold. Where else could it potentially go? I do believe that this moving average, the momentum will change as far as from being, I don't know, downwards facing to eventually looking for an upwards crossover. So that's Bitcoin moving swiftly onwards. UK 100 FTSE again. We saw some good moves there on Friday, maybe on Friday, but last week we saw some good moves. Markets somewhat hovering just slightly above 7,000. But again, it's doing so with caution. Of course, it was also announced last week that the UK was removing Portugal from its list as far as countries where citizens can travel without necessarily needing to quarantine on the way back, which of course was a huge blow for the British travel industry. So we saw this, which wasn't the greatest. And of course, the markets does impact, because we saw, again, a lot of airline stocks somewhat taking a hammering as a result. But also, it was announced, it was supposed to be announced today, but we've heard all of the rumors already, that no new countries will be added on to the UK's green list. Green list? Green list. So we may not see any new countries added onto this list, as far as travelers from the UK being able to holiday abroad without needing to quarantine. So it's somewhat of a blow, even though here in the UK at the moment you have probably, I don't know, around 40 million people receiving their first vaccine, and probably another 22, 23 million receiving both. So for those 22, 23, of course, the EU is allowing vaccinated citizens to travel. So those would be able to, but I still think the vast majority who haven't received both doses will probably be unable to holiday this summer. But thankfully, at the moment, the weather's still somewhat shining. Maybe one of the it was a bad joke I had, I don't know, yesterday. Having a drink with my friends. One of the benefits of global warming. At least we're having somewhat longer summers. But jokes aside, moving onwards to cable. Jokes aside, because there's nothing to joke about when it comes to cable. The volatility is continuing. We saw some moves there as well over the last few days, especially what we saw in anticipation of NFP. In anticipation of NFP, sort of markets hit somewhat of a 2.5, 3-year high there, but since then, again, consolidated. It's just refusing to break out. And in a way, it's somewhat good. In a way, and similar for gold, in a way, it's good because we know something else is coming up. So you see these moves intraday, which are great. If you're a part of one of these moves intraday, it may not look like much as, I don't know, based on this time frame, a daily. But if you are involved, I don't know, end to end, it could be a huge move depending on how much you're risking. But realistically, I think for me, I'm waiting for these type of one-day candlesticks. I'm looking for these type of candlesticks to come, and they haven't as of yet. So it's a case of trying to see where they could be hiding. It's a case of going fishing to see if you can find some of those opportunities. And for me, straight away, just bringing that RSI there to 50, that does, of course, 50 halfway point between overbought and oversold. Currently at 53. I'm looking to see what happens below 50. Is it heading towards that level? If it does, of course, we will be at the floor of, I don't know, 140.83. But would it break past that and head into 39? So that could be a nice move. Providing it does happen, but again, if it does reach that floor of 140.83, will we see just another bull? Because we've seen this area. There's probably more bulls than bears. There's probably, let's even count it: 1, 2, 3, 4, 5. Okay, so it's probably equal. I'd probably say it's equal, but as far as the depth, you are looking at probably stronger bulls in this area than bears. You're probably looking at strong. To be honest, it's fairly equal. I don't know if I'm somewhat colorblind towards the greens, but it's somewhat of a 50-50, to be honest, because you have, let's say, even strong bulls like this, which was a false bull, but then you have a bear like this, you have great bulls, and so it's somewhat even. It's somewhat even there, and which makes it somewhat hard to say. I don't know if we believe it's a bull or bear area, because we do see it's somewhat in between. But at the floor, you could look at, I don't know, buys at support, but even that, if that's your only indication, then it's a tough one. That's probably one you don't want to necessarily be a part of. But looking forward to the shorter term time frame, and again, this week, what we do have from the UK, we said we didn't have much from, let's say, the US as far as data besides inflation numbers, but we do have GDP numbers coming out later on in the week from the UK, and again, just the political situation. What is going to happen? Of course, we have another 3 weeks or 2 weeks before the UK is supposed to. Pretty much things are back to normal. Things are supposed to be back to normal, quote unquote, by the 26th of June. You can go to nightclub. You can pretty much do everything. On the 21st of June, now we are having some murmurs that this may not, or this may no longer be the case. We may see this somewhat put on hold. Indian variant, we're talking about this new Nepal. It just feels like there's always going to be variant. I don't know. What's next? What are they going to say? There's a variant coming in from Saturn or Jupiter. I don't know. Well, it just seems like it's going to be never ending. So for me, it's a case of, okay, when are we going to just put our foot down and say, look, let's just get this done. let's just get this done, regardless of variants which are coming out and things of that nature. Last week, for the first time since the pandemic began, there was a day there was zero COVID deaths. So even though cases are somewhat rising, you are seeing the NHS ahead. Speaking from the UK perspective, we are seeing the NHS doing a great job in managing the incoming patients and things of that nature. So I think the back end, and this is why we're probably not seeing markets react as much also, because I think markets are fed up. Markets have seen the back and forths already and heard different variations and things of that nature, so are no longer as interested in the uncertainty created by COVID, because it's seen it before. It's seen it before, so it's waiting to be told something new. So I think overall, the COVID story may not. I don't want to say may not be impact, unless we see it's more of the reaction to the COVID story itself, as far as number of new cases and things of that nature, new variants and things of that nature. I think the days of those stats impacting markets are probably long gone. It's the reaction to those stats, which will come more from a political level, as far as how governments will react in terms of lockdowns and things of that nature. The numbers themselves mean nothing to markets anymore. It's more the human reaction to those numbers, which I believe will be the interesting part there. So with cable, it's a hard one, but I think from an easy perspective, not an easy perspective, quote unquote, but if you are looking for opportunities at the moment, for me, I personally cannot see them. Of course, you can see them. You can see we're heading closer to that floor, and each time we've seen what has happened there. Huge buys, huge buys, huge buys. But for me, that isn't enough. That is not enough to justify me taking a position. Yeah, you can say, okay, look at the RSI, it's heading to 43. If it lands at 43 and it doesn't break out, that could give you even further cause for a rally and the moving. So you could, again, if you really try, you can always find an opportunity. But I think for me, it will be just too much work. You're forcing it too much for you to really see a true opportunity. Moving for the true opportunity, and of course we started the session getting one absolutely right as far as gold. Crude oil, great stuff coming from crude oil. With this one, of course, and this is what I mean, guys. Sometimes you get lulled into a false sense of security. We knew crude oil was going to rise, but to rise to this degree, I don't know, pretty much heading to $70 per barrel at one stage. That's one from the sessions that we've had so far we didn't see coming. We did not see it coming. We saw the markets consolidating, and we said unless we saw something different from OPEC, would we see potentially a huge move or a huge rise in crude oil prices. And of course, we saw something from OPEC in the sense that OPEC did decide what did OPEC decide? OPEC decided for until June at least to increase production to, what was 2.1 barrels a day. So production is gone back to around 2.1 barrels a day till at least June. And I think from that from that position onwards, we may see further changes and things of that nature, which could potentially impact crude oil or energy prices there. But a huge move, nice breakout. That was the real opportunity. But again, what next? Now you see the markets, I don't know, pretty much overbought. We haven't seen, and this is a daily time frame zooming out. So you are seeing the market somewhat overbought there. As far as the RSI level is clearly overbought. You have seen it past that level in the past. Is this going to be one of those instances where we see that happen? Are we going to see a DRSI attempt to climb towards the 80s? If it does, of course, prices, you're looking at mid 70s in relation to price, $75, $76 per barrel. So that is absolutely in the cards. But do we see that happening now? Looking at the momentum of the moving averages, especially the midterm, that clearly is still looking like it's picking up speed. Could it pick up speed to take us there? Again, I think it really depends on what happens at this RSI level over the next few days. And again, with some of these variants and what we see happening with travel here in Europe now, in the UK, as far as Portugal being released from that list, that's taking away demand in terms of energies, because the more travelers we have, you would assume that would create a dynamic where there would be a greater need for energies, especially we know as far as industries, the travel industries is definitely one of the most energy consuming as well. So it's very interesting just to pay attention to that story from a tourism perspective, and see the impact that has on demand for oil prices, which of course will potentially boost the price. You know what I mean. You know what I mean. I'm just using word demand and prices too much, as I'm just losing my train of thought. But moving onwards, before we lose our train of thoughts, guys, I wanted to look at one or two more. S&P 500. S&P 500. We came close there. Huge move on Friday. Absolutely huge day for the S&P 500 so far in the futures. The SPX, we're seeing some uncertainty there. It's fallen somewhat relatively, of course, at that resistance. Guys, this will hit an all-time high this week. This will hit an all-time high this week. We're pretty much a stone throw away. I'll be very, very surprised if the S&P 500 does not hit an all-time high this week. I think that's what I have to say about this. We're going to have, of course, Mike V on later on. The coach Dale himself is going to be on later on as well. So we will hear more from the stocks and indices experts there, who will be able to give us their point of view and a more detailed outlook. For me, I can just keep it very just nonchalant and laconic and say, hey, S&P 500 is going to reach an all-time high this week, because I think it's just common sense. Just look at how close we are. The RSI there, of course, has broken over that 57, which has also, so it's not just nonchalance, there is some evidence to back it up as well. Crossover of the moving average. So there's a few technicals to suggest it will go through, but I will leave the foot as far as diving deep into this. There is no better analyst on Tradegate Hub, or I believe, out there who really knows what's happening in the US as far as equities and indices. So Mike V will be on later on, a voice you do not want to miss. So do ensure you are locked into that later this afternoon. And guys, just to quickly end up, I just want to look at where are we, Euro USD, before we call it quits for today. Euro dollar, it's more interesting as far as, to be honest, it looks better than I wouldn't say look better. It's not necessarily, I don't know, a person you're trying to talk to at the bar, but it looks you're seeing more volatility in euro dollar than you are seeing in GBP USD. Of course, the only difference between the two pairs is euro and sterling. So it seems there's more uncertainty at the moment coming out of Europe. There is more uncertainty at the moment coming out of Europe. But from a what are we looking at here? What are we really looking at here? Okay, let me switch a time frame. I'm not really seeing too much there on a daily, even on a 4 hour. So you see the huge moves, and this is going to be a huge week as far as data from Europe. So a bit muted in the UK, a bit muted in America, but huge week as far as data from the Eurozone. Starting off tomorrow, GDP numbers coming out, economic sentiment coming out of the Eurozone, Germany as well. We're going to have, of course, ECB coming out later on this week as well. So huge week for the Euro. The only thing I'm looking at right now is the RSI is at 51. If it heads to 57, there are bulls. There's no ifs, ands, buts, or maybes. If this heads to 12053, if this heads to that floor there, the bulls are absolutely waiting. The bulls are waiting to tear these bears to shreds. That's something we cannot debate. But is it going to get there? At the moment, you aren't looking at even where we are now. It looks like somewhat of a I won't call it a floor, actually. No, you could, to a degree. You have seen some signs of this being a floor in that area there, and that area there, and that area there. Of course, a lot of a lot of bears turn bulls as well there, and of course you're seeing the same there. So you could classify this as a floor, but I believe for me, I'm looking at paying attention to the RSI. I'm looking below 47. Below 47, of course, you have the potential for some of these bears, but at 47, if 47 remains, I believe you will see the bulls absolutely come in and just have no qualms with just tearing these bears to shreds. So that's an interesting one to look at. But I think so far, and Mondays are always like this. So far, it's a lot of waiting for confirmation. It's a lot of waiting for confirmation. Guys, you've seen by the trades I've taken last week with, let's say, gold, and how we planned the trade, and how, I don't know, the stars somewhat aligned. We saw where the opportunities could come. We saw what could cause the moves, and so on and so forth. And in the end, we were involved in a 35. Well, beg your pardon there. We're involved in a $35 move with gold. So it's a case of waiting and seeing to see if that could happen this week with different markets. But I think it's just a case of waiting and planning, and hopefully our plans could turn into potential opportunities. So guys, great session. Let's definitely keep an eye out on what Mike V has to say later on. Let's keep an eye out on what Dell has to say later on. And I'm sure as the day progresses, as markets open there in the US, we will be able to find more opportunities, and hopefully you can do that with us here at TradeGate Hub. So guys, great session. I will leave you to it for today, and I will see you back on Wednesday. All the best. Enjoy the rest of your day. Cheers. Bye-bye.